Hi guys, welcome back to the channel. My name is Dave, and today I want to talk about an option trade that I'm in right now with my number one holding. This company is one that I have a lot of conviction for. I am a firm believer, and I've been buying it over the years, and it hasn't disappointed. But now, it's come well of its eyes, and I decided to sell a put against this, and I'm a little bit trapped. But I'm going to show you how I'm kind of worming my way out of this. Hopefully, we're not done with it yet. So, if that is what you're looking for, please stick around. Whoop. So what is my number one holding? It is GOOG. Google, Alphabet, you know that one. I've been buying this for years. I'm probably my average price is right now about $1,600 a share. So obviously I've had some nice gains over that time. And I've been buying it, over where it sits right now as well. Just buying one or two shares here and there as it moves along. So I buy this in my retirement account. I don't sell it. I don't trade it. Just like my Apple shares, which is probably my number two holding, by the way. So I really like Google. We can go over the fundamentals a little bit. We'll take a look at this before we jump into this option trade. But just understand, very first thing, before I ever go to sell a put, especially in something that's as expensive as Google, I do my research. I want to make sure I'm comfortable with the idea that I might be stuck in a trade like this where I'm going to own shares of this particular stock. And in this market right now, it's definitely something you have to have a firm belief in. So let's start off by looking at a one-year chart. Let's get our bearings here. So if you went back about a year ago, it was about $2,300 a share. Everything in between there has been white noise because right now we're right back to about $2,300 a share. So that's where we sit. But when I entered this trade, it was on 4/8 of 22, and it's kind of been a slippery slope. So ill-timed to say the least. So if we look at a chart here over the last couple of months, going back to when I made this trade, it would be right about here. And since that time, it's been all downhill with a couple up days, mostly down days, mostly bad news, and a rough market. So how could this possibly turn out well? Well, we'll talk through that trade a little bit more here in a moment. Fundamentally, I look at Google and I see a powerhouse. I see a price to earnings, which is the big focus these days. It's around 20. Going forward, we might see teens. So I really like Google going forward. It's got a lot of growth. It's got a lot of cash, make a lot of money. So there isn't anything that I don't like about Google at this point. Their last earnings call wasn't bad, but in this market, it was received poorly. I think anything would be other than I blew it out, but I like it going forward. I have a high conviction for Google. That's why it's my number one holding. And that's why I'd be willing to actually sell a put on something that's expensive. So keep that in mind. I don't want to really focus on the valuation so much right now because I want to focus on the trades and how you can maybe work through something like this if you want to enter into options trades like this. Obviously, nothing has to be this expensive. You can do it on something a lot less expensive, but I think this particular trade, I think just highlights how you can utilize options with something like this, even in this crazy market. So let's talk through this Google trade because it gets a little convoluted at times, I'll be honest. And, but it's a work in progress. So we'll see where this goes. You can let me know your opinion down in the comments. So back on 4/8 of 22, I sold a put at 24.40 with a 5/6 expiration. That's when the stock was at 26.80. So I entered into this trade again with a lot of conviction for the stock, feeling pretty good that if it dropped all the way to 24.40, I would be okay to own it. Now, again, that's a lot of money. That's $244,000. So we're talking about a lot of money here. And for that, I collected $2,700 approximately in premium, which gave me a break even of 24.13. So I felt like I was off to the races, feeling pretty good. But of course, I knew also that I was trading across earnings on 4/26. And I felt good about earnings going into this earnings call. But unfortunately, the market didn't receive them that well. They didn't hit all their numbers, and some future growth numbers didn't look as good. So needless to say, that evening on 4/26, I was like, oh no, what's going to happen? On open. So when this happens, you have to wait for the earnings call in the morning, everything clear the air. So you take a step back, right? You don't have to like jump into this and go, oh no, I've ruined myself, right? Because on that day, that next morning when it opened, it hit a low of 22.62 on 4/27. So it wasn't looking very good. So on that date, I decided to make a second trade. So again, it's the morning of 4/27. You got to wait for the air to clear a little bit. And that's when I decided to sell a 24.50 call with a 5/6 expiration. The stock was at about 2,300. So let's look at it now, right? Earnings are past, kind of hopefully quiet, calm waters ahead for a little while. No big news. So I've got a 24.40 put with a 5/6 expiration and a 24.50 call with a 5/6 expiration. That's what's known as a strangle. And basically, I'm saying I see calm waters ahead for the short term, so I'm willing to enter into this because what can happen, right? It can trade sideways because people have asked me about this. There's definitely additional risks that you have to be aware of. So if it trades sideways, well, I'm just going to add some premium because I sold this call and I'm going to collect that premium. If it goes down a little bit, that's okay. If it goes up a little bit, that's okay. But if big news comes out, let's say, I don't know, Putin decides to take his tanks and go home. We all celebrate. We're super happy, but so will the market. So I would be super happy with that. I would take my pain with that. But I don't think it's going to happen in this case. So in that case, though, the stock shoots through the roof, and I have a short position here on that call that I have to cover. So I would be out quite a bit. So we want to avoid that, but I'll take it. I'll take it. If you can take the tanks and go home, I'll be happy. I'll celebrate myself. But anyway, you get the point here. So I'm trying to collect additional premium and reduce my basis, and I'm taking on this additional risk. But just be aware, the big risk with a strangle like that is that it does shoot through the roof, and then you got to cover at who knows what price. And that's when the market closes at night, opens up, and Google's up $300 in the morning, and you're like, oh my gosh, now what? So again, keep that in mind if you decide to go into something like this. Walk through it in your mind, write it down, understand the risk that you're getting yourself into. So that was my second trade. And for that, I collected $1,506. So feeling okay now. I've got my 2 trades working. And then what's the next big announcement? Obviously, that's the Fed announcement. It's going to happen on 5/4. If you are trading options for income like this, you do want to be aware of big announcements. So earnings announcements or a Fed announcement. At this point, I think everybody knew about what was happening on 5/4, right? So on 5/4, prior to that announcement, I did close my 24.50 call because I collected most of the premium, and I was able to close that out for $307 before Jerome Powell jumped out of his box and made an announcement. I wanted to get out of that trade. So I collected $1,506, but it cost me $307 to close it. So I made about $1,200 for writing that out and taking on that risk. Let's not forget about that risk. And then he came out and he made his announcement, and the market took off. Everybody was overjoyed, and that worked out pretty well for me. It could have worked the other way, but I was able to roll that initial 24.40 put after the announcement, so a $2,400 put. I didn't time it perfectly. I probably could have waited another hour and profited quite a bit more. But I rolled it out to a 2,400 put with a 520 expiration. So that worked to my benefit because I collected $6,209, but it cost me $4,800 to close that other one. So if I would have waited about another hour, this number probably would have been about another couple $1,000s in my favor. But I'll take the $1,408 that I collected and 60 cents and run for the hills because I'm better positioned now. So let's summarize exactly where we're at as of 5/8/22. So we're sitting here on a Sunday looking at all these trades. Collected $2,700 for that initial put that I sold. Collected another $1,500 when I sold that call against that, right? Entered into that strangle position. But then I had to close that out. It cost me $307. And I had closed out that initial put when I rolled it down, right? That cost me $4,800. But I got to collect $6,200. So all told here, I've collected $5,300. And that's in my account. That's mine. And I've got that cash right now. But I'm stuck in a position where I've got a $2,400 put with a 520 expiration. So if I take that 2,400 minus 53, I get a break even now of 23.47, essentially, right? That's my break even point. But the stock itself is at $2,313. So where do we go from here? Well, I'll show you my trade too. I'll pull that up so you can see that this is infidelity, right? So on 5/4, I've got the short. You can see the loss, and it says 91.6%, but we know the numbers over here. So my cost basis, there's a 62.09. If I wanted to close out of this right now, it would cost me a lot more than that, and obviously I would take it on the chin. So what's the game plan? It still begins with your feelings about the underlying security, in this case, Google or Alphabet. Are you a believer? I am. So if this was going to get put to me at $2,400, I wouldn't feel terrible about that because I have conviction for the underlying security. Now, as 520 approaches, let's think about what could potentially happen since I'm doing this particular trade for income. So if it rises above 2,400, and then I'm not going to worry about it. It's not going to get put to me, but I'll be looking probably to sell another put at even a lower strike. That would be great. That's perfect. Now, if it continues to trend right around 23.13, then I have 2 choices, right? One is to allow it to be put, and I'll sell an in-the-money call to reduce my basis as much as I can and take risk off the table. I'll link a video above where I talk about that. It's one good way to handle it. Another one would be to roll that put out, just like I did before, from a 2,400 made a 23.50 put, collected a little bit of premium, and again, take risk off the table as I reduce my basis. So that's one of the great things about trading options like this. Because if you just think about, oh, when it got to 24.40, if I bought 100 shares, what that would look like now would be very different from where I sit right now, utilizing options. So it's one of the reasons that I like to do that with options. So any questions on any of this, please just ask me down below. Certainly is a crazy market that we're in right now. I talk to different people, I talk to financial advisors, and I've heard everything from S&P 500, 2,500 by end of year to 5,000. That's quite a spread, right? People don't really know right now. They're not really sure. So I'm still trying to keep some of my money working, and you can see this is a large pile of money that's working right here with the idea of generating income. In a perfect situation, they wouldn't know, and we would trade sideways as the bulls and the bears push the market around, and hopefully maybe it stays as flat. It's perfect for an options trader like myself that has an account like this. It tends to be. It can work out. So we'll see. I'll update as we move forward with this particular Google trade because it is pretty fascinating. At least it is to me. So if you have any questions, ask down below. I really appreciate you watching. Thanks for supporting the channel, everybody out there. And we'll see you real soon. Have a great night. Whoop. What a dumbass. Who makes a trade like this? Who risks that kind of money on Google? The name's not even serious.